Welcome to TradeTheMBI.com. This is John. This report is for the 9th, and well, here we go. We've got 1, 2, 3, 4, 5 days. Usually is about the extent of most runs before we get a little bit of weakness, and here we go. Look at that. You can see a fade off here of the steel, which is short-term buyers. Slight uptick in shorts. That could give us a little bit of a pause. It doesn't necessarily mean anything dramatic, particularly when you still see red rising here. We're at 712. If we break the 7.5, that could be enough to actually break that through. We're still seeing rising shakeout. So when I say softness, potentially move within the range. ABM yellow is what, this 27-29 range. That would be pretty significant to see that much of a decay in price. Doesn't seem to be any real major impetus. Orange, though, continuing its way up. Again, like the last time, all we expected with that was a return to the ABM green at that particular point, and that's all we got. We were so close to the yellow. Now that you're so far away from it, the yellow's going to continue to rise, but just to move back to it at least maintains the stability of the move is really the easiest way to describe that. And for the NQ, definitely a little bit stronger. You can see that you don't have a complete oversold yet from the short-term buyers who faded out, but it's been rising mid-term and long-term buyers that filled in the void coming into the new year with all that reallocation money, having to put it to work somewhere. And especially with the tax ramifications, they had some time to rethink some things, and clearly some people rethought the euro after this parabolic run, and we knew this was coming. I mean, we talked about it right when this took place right here, and the expected fill back would be down to that 189 range. So it's pretty close to it already. A pretty good portion of it's been filled up here halfway into the middle of that block right now. So now, would I expect that to continue more? Yeah, you've got the DOC spread, but here you do have to see that you do have a complete steel reset, and your orange is still above 13.5, so we could see a little bit more fade off before stabilization, even with the reset of short-term buyers, simply because it just got overdone, and the algos are going to look to just retrace. They were just forcing some short covering on the breakout, which was an interesting one, but given the fact that there's less pressure for rate increase in the U.S. and that, certainly bolstering TLT here. The real question, and like everyone was talking about coming up, is going to be what the inflation numbers and retail sales are going to be. The inflation numbers will be the interesting one because it's inflation now, and it's less inflation in the sense of oil. When we always think about inflation, we look to oil first because it's usually the precursor. The secondary one we've always talked about over the years has been labor, constriction of labor force. This is the whole point where now you're going to see the effects of some of that clamping down on the border and reducing mass immigration is going to force wage rises. We're already seeing from the tax break increases in pay as well as bonuses. So it'll be interesting to see if businesses take the bonus approach over increasing hourly wages, because that it's a little easier on them and certainly wouldn't have the same inflationary impact that just general wage increases. So that's going to be an interesting one going forward. It's pretty hard to say that companies can be coordinated across the board to understand their effect on the overall inflation environment, but the bonus side of it really would be less inflationary than the actual hourly wage things. And of course, then you're seeing just the opposite effect. Those that raise the minimum wage, all the states that did that are seeing massive low-end, if not just layoffs, reduced hiring, and or benefit changes. So it's a net negative when you force minimums on corporations and things like that. When it comes to that, whether it's correct or not, doesn't matter. We're just talking about the economics of it. Leave the judgment out of it. It's about being able to trade it. And this is where gold, a little bit of a pause here as it absorbs some of this. It's got some backfill to do when we get a short signal out of it, but complete steel reset on the move of the orange above, but you still have rising shakeout. So until that flips over, you're still looking strong. we were strong in the 5K. It was zero range. We came down to that 50Ks when we did the report. We were expecting a little more weakness. We got a little bit more. Tried to pop up, fought back right back down to the 50% line and just pretty much hugged it. And then started to ease back to the highs, and that's pretty much where we found ourselves. We've revisited that same 50%, and of course everyone will say, well, it's not really 50%, but you see, the Fibonacci's read where our adjustment is and makes the appropriate move. It is a 50% retracement of the adjusted new high, and that's because this move was over. And you had your corresponding rising highs, which would have been a negative had you had a short signal come through. We didn't even get one until just before this decline right here, this magenta, and then boom, it was clarified. Actually, the orange went above 13.5 as the shakeout was dropping, even before the down candle began. Watch that one happen, and then it was pretty immediate reboot. It was pretty much just to clear some stops from the previous breakout range. Last positive extreme was right here, and that had already been filled in during the regular daytime, so there wasn't anything necessary at that particular point. I do want to point this one out from XBT, which is the futures Bitcoin. You can see from the grand short that we saw back over here that I had marked and pointed out when it was happening, the DOC spread that took place, and this is a great one to look when people, want to say, oh, well, I didn't know it was going to turn around, cover, blah, 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 blah. Well, if you follow that steel, and you can check this on most of them, when you don't get that reset that come back down below the 13.5, you usually stay in trend. This also couples with when the orange tracks well in between cyan and red, like in this particular case, but the fact that, again, you ended up with that dip, but steel above the 13.5, no reset there, and it's led to a continuation of, can't quite say short as much as just from the decline. There hasn't been a reboot that would justify a significant breakout past the range. And if we ran a longer span on this, we could see the percentage return going back to it, but if you can imagine from where that original high was right about there, this would be the 50% range, nowhere near that, and then down here you'd be about the 38. So this is basically a fall down 23% on the broader low to high range, and still showing weakness. I mean, we're below 15, even though you get the small reset right here. It doesn't look like we'll have ton of power if that grid doesn't get above the green negative 7.5 range. So it's worth noting because you'll see that in other charts as well, and it's a good way to get an idea of there's been a effective reset, so to speak. So just like to add those little extras in there. As always, though, if anything significant, this was absolutely just nothing to even mention. So if something special happens, I will certainly put it on the Skype chat. As always, trade well.